All right, private markets are grabbing investors' attention. BlackRock, one of the largest asset managers, has its sights set on the growth of private markets. But our next guest highlighting how that growth could evolve into throwing private investments into the ETF mix. Telis Demos, heard on the street, writer and co-host of Take on the Week podcast at the Wall Street Journal, joins us now to discuss. Telis, it's great to see you. So in this column, Telis, you walk your readers through how BlackRock is basically betting that private markets could morph into ETFs. Now, BlackRock is kind of replicating the playbook of their acquisition of iShares, but walk us through it, Telis.
So, we take it for granted today, but ETFs were not always the sort of mega asset class that they are now. 15 years ago, they were big, but they weren't big like they are today. And so when BlackRock made what was a transformative deal for them back in 2009, to buy the Barclays Global Investors business, which had inside of it the iShares ETF business. And that really launched them into the, kind of gigantic, supermarket of asset management they are today, managing over 11 trillion. And so similarly, you can argue that assets like, private companies, private equity, and also private credit, right? Private loans to private companies, things like that, are not small today by any means, but they also aren't, generally part of a lot of people's portfolios. And so you could say that similarly, there's some sort of big transformation to come in those markets as well. And likewise, it's not just about the fact that these assets exist, it's also about how they're packaged, how they're priced, how they're sold. And that's where I think that there's an enormous opportunity for a company like BlackRock to take the various pieces of the private credit market, which sometimes gets talked about as monolithic. It's actually a lot of different things. To take those, package them up in a way that suits, various different investors' needs, whether that's a pension fund, an insurer, an individual, and deliver that to them, even without being, the actual people going out and making these loans, right? The people in the field, it can still figure a way to package that in a way that makes BlackRock a lot of money and generally grows the size of this market.
Well, it's so fascinating, Telis, because there has been so much demand for alternative investments, and particularly private investments, but the access has been limited, right? I mean, you could buy shares in something like a Blackstone, of course, but unless you were a certain echelon of investor or a huge institution like the ones you're talking about, you didn't have access to this. And so, I mean, maybe it's a little bit surprising that it took so long, right, for somebody, and it hasn't even happened yet. We're just sort of theorizing. But looking at their acquisition of the ETF business that led to iShares, what can we sort of extrapolate as to what this could look like?
Well, I think that, we've started to see these things trickle into the broader market, right? Like there are, some funds that are available, not necessarily to all investors. Some of them are not publicly traded. They are available to accredited individual investors. And obviously, like you said, institutions, though, of course, sometimes those institutions are people's, kind of most investors' pathway into anything, right? So if you have a pension that's managed by someone, they might be invested in that. So it's not that we collectively haven't had exposure to these things. And then also, there are publicly traded vehicles like business development corporations, BDCs, REITs, things that own kind of these chunky private assets that you have access to. But it's been, more, I would call it compare it to an a la carte sort of offering, right? Like if you wanted to go out and seek these things out, you could find them. Maybe they might even be part of something an advisor would get you into, but they haven't yet become part of the mainstream of oh, I've got my 401k, my company allocates it to something, right? Say that's a target date fund, right? Some really mainstream vehicle. Those things are still almost entirely invested in just public markets in general, right? Maybe they're diversified between stocks and bonds and maybe some stock sectors, right? And that's where ETFs have really come in, where you're not necessarily an active investor, but you might want to say be a little overweight the US. You might want to be overweight a particular sector. The ETFs can help you do that. So I think that there's still, so although all these things have maybe existed for private assets available to the everyday investor, it hasn't been something that's been more, it's been more, call it, sort of strategic than tactical, right? It's not just like, oh, okay, I want to add a little bit of this flavor or that flavor. And that's where I think there's a major frontier, is being able to just sort of, bring in a little bit of this exposure here, a little bit of this, of that exposure there. And that's actually an interesting thing that BlackRock did as well. Like, not only have they acquired managers of these assets, they've also acquired a data company, right? Preqin, over $3 billion deal they did for basically data to help figure out, oh, okay, here's what the return profile of this flavor of private asset is. This is why it might fit into that type of portfolio, and convince people who are now 100% in public assets to get into private assets.
Yeah, more flexibility, to your point. A really interesting point about strategic versus tactical. Telis, thank you so much. Interesting stuff, and I guess watch this space is the takeaway. Appreciate it.
Thanks for having me.